You walk into a bank, you deposit your hard-earned money, and you just kind of assume it's safe, maybe even growing a little bit. But according to one really popular video, the whole financial system isn't actually built to make you rich, it's built to make the banks rich. So today, we're diving into the core secrets that video claims the banks really don't want you to know.
Okay, let's just jump right in. The source material kicks off with this really sharp question, and it pretty much challenges the most basic thing we believe about banking. We trust that a savings account is, well, for saving, right? For your money to grow. It feels like the responsible thing to do. But the video we're breaking down today makes the case that the exact opposite might be true, that you could be losing money without even realizing it.
And what's so fascinating is how the source breaks down the actual math. It's all about this idea called purchasing power. So that tiny little interest rate you get, maybe 0.5% if you're lucky, it gets completely bulldozed by inflation. So while your account balance might say you gained $5, your actual ability to buy stuff with that money has gone down. A coffee that cost $3 last year might be $3.10 this year. When you apply that to everything you buy, you're actually about $25 poorer just by leaving your money safely in the bank.
This leads to a way bigger and honestly a much more shocking claim from the video. If your money isn't just sitting in some vault and it's actually losing value, what are the banks doing with it? Well, the answer, according to the source, is something way more complex than just storage. They're actually using your money as a seed to create brand new money.
So here's how the video explains this whole process, which is known as fractional reserve banking. You go and deposit your $1,000. The bank doesn't just stick it in a safe. Nope. They only have to hold on to a tiny piece of it, let's say $100 as a reserve. They then loan out the other $900. But here's the wild part. Your account still says you have $1,000, and the person who got the loan now has $900 in their account. The bank has effectively created $900 out of thin air, and now they're going to charge interest on it.
So, how does all of this actually play out in the real world? Well, a system that creates money through loans naturally leads to a world that runs on debt. But the source argues this isn't just one single game. Oh no, it's a game with two completely different sets of rules. One for the wealthy, and another one for everybody else.
The video points to the classic 30-year mortgage as the perfect example of that first set of rules. You buy a home, and that feels like you're building wealth, right? And you often are. But check this out. Over the life of that loan, as this slide shows, you could end up paying nearly the entire value of the home all over again, straight to the bank, just in interest. That interest is pure profit for the bank, all generated from the money they loaned out.
And then you've got the other side of the game. The source calls high-interest debt, like the 20% average on credit cards, the bank's secret weapon. It's not just there for convenience. It's designed as a potential trap that becomes incredibly profitable for them when you can't pay your balance in full each month. That interest just compounds and compounds against you.
So, here's the crucial point the video makes. This whole debt game is fundamentally rigged. It's not about how much you borrow. It's about who you are when you walk in to borrow. The system, it claims, rewards the people who already have wealth with cheaper debt, creating this cycle that's really, really hard to break into or to get out of.
I mean, this comparison from the video is it's stark. It shows how someone like Mark Zuckerberg could get a mortgage at a rate of just over 1%. At the time, that was less than inflation, which means he was essentially being paid to borrow money. The bank sees him as zero risk. Now, compare that to the 20% interest the average person might be paying on their credit card. The wealthy get rewarded, while everybody else pays a huge premium.
And this is where the rules completely flip on their head. For the wealthy, the video explains, debt isn't a burden at all. It's one of their main tools for creating more wealth. They borrow enormous sums of money at these rock-bottom rates to buy assets, things like real estate, businesses, stocks, that are going up in value way faster than the interest on their loan. They are literally using the bank's money and even inflation itself to get richer.
And the game goes even deeper, all the way to taxes. The source claims that banks are a key part of a system where a billionaire doesn't ever have to sell their stock and trigger a massive capital gains tax bill. Instead, they just take out a very cheap loan against those assets to pay for their lifestyle. It's a perfectly legal way to get cash from your wealth without ever paying tax on its growth. It's pretty incredible. So after hearing all these secrets, creating money from nothing, a two-tier debt system, legal tax loopholes, you've got to be asking, how does this whole thing even hold itself together? Well, the video boils it all down to one final, powerful, and actually surprisingly simple concept.
That's it. According to the source, the whole thing is built on trust. It all works because we, as a group, believe our money is safe. We believe that the number on our phone screen is real and that it will be there when we ask for it. But if everyone went to withdraw their money at the same time, a classic bank run, the system would just collapse. Because the actual physical cash, it just isn't there. It's been loaned out over and over and over again.
And here is why all of this really matters. The video's central argument is that the whole system thrives on us not understanding these rules. A lack of financial education means people are way more likely to fall into high-interest debt and way less likely to use the system to their own advantage. A confused customer, the video claims, is the perfect customer.
Ultimately, though, the source doesn't present all this information to scare you. It's really to offer a totally different perspective. The argument is that just understanding the rules of the game is the first and most important step toward playing it differently. It's about shifting from being a passive pawn in the system to an active player. And that leaves us with the final, big question. Now that you know the rules, what's your next move?